NIO stock has had a mixed 2021 and the stocks fell by almost 40% last year. Yet the operating performance has been pretty solid with a rise in delivery rate, and NIO outshined its rivals, and multiple factors can back NIO stock to outperform this year. Hello folks, welcome to yet another exciting video. Before we begin, don't forget to hit the subscribe button and turn on the post notifications so that you won't miss out on any of our upcoming videos. NIO hit milestones in terms of deliveries and recorded a 109% increase. However, a regulatory crackdown on Chinese tech companies and tremendous analysis on Chinese companies listed in the US has been a major concern that also appeared to be hurting NIO. Apart from that, there are many factors that can have a positive impact on NIO. Notably, the valuation of EV looks very attractive. As of now, the stock trades at under 5 times projected 2022 revenues. On the other hand, its rivals Tesla and XPeng also trade at pretty good rates. Also, according to analysis, the chances of NIO experiencing a hike in revenues is highly likely and would exhibit a strong 75% per consensus estimates. All told, the long-term outlook for the EV stock appears good. On a positive note, NIO is gearing up to expand its model lineup this year and will launch the ET7 full-size sedan, followed by the ET5 compact sedan. According to reports, the company might as well unveil more new vehicles this year. With international expansion being a great prospect for NIO, we'll see the EV company taking a step closer to becoming a phenomenal player. In 2021, NIO entered Norway, and in 2022, it plans to enter the 5 other European countries' markets. To boost the volume growth in the longer term, it's expected that the company will double up its production capacity at its Hefei plant and hit the benchmark of producing 240,000 vehicles a year by mid-2022. Naturally, due to all the factors, the margins are also likely to pick up further since economies of scale are improving massively. One thing to note is that despite exhibiting strong operational performance, NIO shares are sitting at multi-month lows. Even though NIO is making an international entry, the CCP is loosening its grip. Analysts believe that NIO stocks will thrive despite the fact that 2022 will be a year filled with risks and challenges. In short, we can say that the Chinese EV venture is focused on its global ambitions. Last year laid a strong base for 2022, and the share prices also ended below their all-time high. So what are the investors missing? The risks, challenges, opportunities. There's a lot more that you need to know about NIO before investing. The EV sector competition is undoubtedly intensifying, and we can see many catalysts going forward. Yet we can say that NIO will become one of the phenomenal players in the EV space, and it's just a matter of time before it does so. Last year was highly volatile, and NIO also has had its lows and highs. NIO started off 2021 on the right foot and entered a great rally initially. The prices of shares skyrocketed from the $15 range to $60 in January within 3 months. However, the rest of the year exhibited a continual slide in pieces, with the shares hovering around a range of $30. But the price depreciation doesn't correspond to fundamental changes, and the proof that backs the above stated claim is that NIO made pretty good moves in 2021 and has shown great progress. Firstly, the EV company managed to land great deals with energy companies like Sinopec in China and Royal Dutch Shell. The collaboration was signed to boost the rollout of NIO's charging stations and battery swap stations, and the numbers are expected to hit 4,000 by 2025. Secondly, NIO expanded its operation and entered the Norway market and is expected to continue doing so this year. So if NIO wishes to maintain high growth rates, then international expansion is a must. Lastly, the company had to still face some weak months. However, overall deliveries hit a record and surged up by 109% in 2021. The construction of NIO Park has a significant role in the boosting up. The NIO Park is more like a hub for EV ventures, and NIO is the main investor in it. It has a production value of 500 billion yuan per year, and it looks like a good way for the company to achieve great control over its production. So what can we expect in 2022? All told, we can infer that 2022 will be a challenging year for the entire EV industry and for NIO. You might think that the competition was intense last year, but it's going to get a lot more intense this year. Last year, we saw many EV startups entering the market like Chinese-owned XPeng and Li Auto. Recently, Amazon-backed Rivian marked its market debut, adding more intensity to the overall competition. We're already aware that the EV sector has been experiencing intense competition, but it's going to get a lot worse. In 2022, we can see more pressure coming from legacy car manufacturers. They've been trying hard to compete in the sector, and according to the analysis, we see the efforts beginning to pay off in 2022 and next year. Such companies like Volkswagen and General Motors can be added to the list of legacy car manufacturers. Volkswagen had the second best-selling EV in Europe. General Motors, on the other hand, managed to sign a deal with Amazon and will be the center of attraction. Supply constraints and margin suppression due to an increase in the cost of goods will be the main challenge in 2022. The most relatable reason is the cost of lithium, which is used to make the batteries for EVs. According to analysis, it can be an issue as lithium is not the only component that may exhibit a supply shortage. With the rise of the EV sector, and as it is, many industries around the world have been competing for semiconductors. At the same time, NIO will have to battle the regulatory challenges from China, and its share price may be burdened by the concern of the CCP narrative. However, despite all of the challenges, we may conclude that 2022 will be a good year for EVs and also for NIO. The anti-Chinese narrative is especially expected to cool down in 2022, and it's visible now. The Chinese government has already lifted foreign investment limitations in auto manufacturing, and the officials stated that they would not ban the vide structure. This will act as a helping hand to NIO and the rest of its Chinese peers. However, NIO still has better prospects than others in 2022. Also, in 2022, China is planning to reduce its EV subsidies by 30%. These subsidies will especially be applicable to vehicles under the $42,000 price tag. But the thing is, NIOs are more expensive than this because they're high-end, so the subsidy reduction will render it more competitive vis-a-vis its lower-priced peers. Should investors buy NIO stock? The Chinese EV maker has had a bumpy ride, and NIO sees the sell-off as an opportunity to invest in the stocks. While uncertainty still encompasses NIO, there's no question that NIO has great long-term upside potential. In December last year, NIO recorded 10,500 deliveries, which is about a 50% increase from 2020 reports. It's easy to see why investors are excited about its growth. The Chinese EV makers hit big delivery figures, and NIO stocks surged the most. NIO began 2022 with a bang. With that, we've come to the end of the video. Thank you for watching. If you found this video informational and wish to see more content like this, please hit the like button. Do let us know your opinions in our comment section. Don't forget to subscribe to our channel and make sure you turn on the post notifications so that you always get notified whenever we post a new video. Till then, keep watching our other videos. We'll see you guys in the next one. Goodbye.